Hello there, traders. Hello there, traders. Welcome back to TOGS Trading Podcast, TOGS 52, ladies and gentlemen. All about journals, data, and learning from your trades. And listen, it's all about turning your trading records into your greatest teacher. Right? Most traders keep journals, but many of them, fail to learn from them. Okay, so in this episode, myself and Ian, we're going to unpack how to turn your data into decisions because when used properly, your trading log becomes more than just simple record keeping. It becomes a feedback loop for growth, discipline, and helping you refine your edge. So lots for us to talk about and cover today. As always, I'm joined by Big Ian there in Dublin. Looking good, Billy Ray. How are you doing?
I know. I got a haircut.
I know you did get a haircut, didn't you?
Mm, I
You're
did.
looking trimmed. Are you away on your holidays?
I am away on my holidays next week, as we were just discussing. I'm going to Norway on Sunday for a week.
Nice
Well,
touch. Nice touch.
yes, we're all going. My wife is at a conference for curators or something in Norway,
Where in Norway?
Oslo, and my
Oslo.
son wants to look at Viking ships, and I want to
Uh,
complain to the Norm or to the Norwegians about stealing Irish children in the 11th century or 14th century, whatever it was.
yeah, that's a way to enamor yourself with the local
Mhm.
populace. That'll go down well,
Terrible.
that
I mean,
Ian.
they stole 43 children from Clonmacnoise and never gave them back.
Well,
So,
there you go. Every day's a school day, all right? Every
mm,
day's a school day. Well, I think what you will be in for is you'll be in for a bit of a shock once you go into a bar and buy a bottle of wine or a pint of beer. You might you might find yourself in a little bit of a shocked state. It's not the
mm,
cheapest place to go
mm,
drinking and stuff.
no.
Trust me, I learned that the hard way a few times and stuff. I also skied off a cliff in Hemsedal and stuff. It wasn't the smartest move, but
Mm.
anyway, that's another story for another podcast, isn't it? How's your week been though? Other than getting ready for your getting Sean for your holidays, how else
Yeah.
have you been since our last session?
All right. All right. I was on Telegram all the time, trading away, doing loads of live trades. It's very interesting. I really find it interesting how, because I did it before and then I stopped it for a little while and then I started it again and I'd be more consistent about posting. And it's really interesting how it affects your trading because
Yeah,
because people are watching you. So you're more nervous about having losses. Where in the old days I was still in a different Telegram room with friends, and it was more a gentlemanly afternoon leisurely trading thing, basically. You weren't putting on, you weren't under any scrutiny. And now I find that I'm doing quite a lot, doing quite a lot more stuff, and it actually regressed some of my trading, some of my setups. So there's a few little things where I was exiting early and I was doing stuff, and it's all in the like I'm still doing quite happy points every day. That wasn't at one losing day, I think, in the last 2 weeks or something. Uh, but I wasn't trading as properly as I normally would do when I'm trading offline or just trading with a bunch of friends in a group because you're just more conscious of making a loss. So it's it's a different paradigm. It's fun though, it's fun to do it. And the other thing too is it does actually force you to do things because if you can hide your trading from the world and you can sit there and you can screw up any way you want, and when you're doing it public and you're doing it live, there's consequences. You look like a fool, and
yeah,
that's
yeah,
outside of losing money, there's only losing money and looking like a fool. They're the two things that people are most afraid of, I think.
yeah.
Um, so it makes you keep your thing, and I only do it for about an hour and a half a day because that's the quality time that I generally have. Because after an hour and a half of doing that, because I could do 10 trades in that hour and a half, and you're pretty spent like after an hour and a half of just absolute concentration and trying to avoid the pitfalls
Winchester.
of scalping. But it's good fun. I really quite enjoy it now, to be quite honest with you. And it's nice as
Good.
well to have some sort of interaction and company during the
No, no,
day.
totally,
So, nice.
totally. I keep meaning to follow it. It's just that we're in the kind of stuff when I'm sat down to trade, everything gets switched off. I literally Telegram, Discord, everything just gets switched off because like Twitter, everything. It's just
Mm,
it's like a barrage and stuff, and I just like literally just want to basically cancel everything out, and I'm here to trade, and I'm actually just literally focused on the trade, and then I can have a little flick of it later on and stuff over a cup of tea
mm,
and what have you. But no, it's good. I'm pleased that that kind of that kind of transparency, is bringing a bit of accountability
Mm,
to the
mm.
trading. And probably this is a good time to tell all the good folks who are listening and subscribed. Thank you very much once again. So Ian and I did a bonus session last week on trading double tops, double bottoms. So something that we both do, but as you will find when you see the session, we both do it in our own ways and stuff. But it's something we can talk about. So keep an eye out for that. All right, that'll probably be released maybe this coming weekend, so you can watch it over the weekend. Yeah, by all means, keep an eye out there. Listen, if you aren't subscribed to the YouTube channel, please do so, because whilst it will be available on Spotify and Apple and all the other good audios, it's me and Ian talking about charts and trades. So it's not much of a radio gag, shall we say? Is it? It's it's going to look better on the YouTube channel. So please, if you haven't, by all means, get yourself subscribed. Okay, so you get alerted when that comes out this weekend. And then we will have the final episode of season 3. So that'll be TOGS 53, which might be a couple of weeks because, of course, Ian's going away on his holidays. But it's all about, TOGS 53 will be all about trading with constraints, right? It's about how do you go about managing multiple accounts with limited time. We appreciate lots of people are trading, around very, very busy lifestyle and stuff. And so we'll take a little look at that. So keep an eye out for that. But there you go. There's the housekeeping done. Listen, Ian, journals, data, and learning from your trades. All right, where do you stand on that? What are your own thoughts?
Well, I always think this pencil used to be bigger than this pencil. So I do a lot of journaling because I think it's really quite an important thing. Can't always read it because my handwriting is terrible, but I do quite a lot of journaling. The main thing I thought with journaling was you never make the same mistake once. So what you're basically doing, the big thing reason that you're journaling is so that you find patterns in yourself. Everybody has patterns, and you either have a pattern for success or you have a pattern for failure. So journaling helps you discover which one you have at that particular moment in time, and it's horrendously boring. I think journaling is probably the most, outside of losing money, probably the most painful job in trading is journaling. Um, it's the one I think that traders skip the most
Yeah,
is journaling. I think 70, I saw actually when I was doing a little bit of research for this, I saw somebody said that 70% of traders don't journal.
really.
And 30% of those the traders who do journal, in my opinion, half-arse it. So in reality, you're probably getting less than 10% actually do a proper journal.
I did
A
not
journal,
know that.
yeah, a proper journal has two main things. One is data, just generating data on your setups. So you've set up and you want to know how often it works, how often it fails, how far it goes generally, so that you have an idea. And then the second part is the emotional side of it, because it's emotion at the end of the day. It's emotion that really makes it's the psychology that really makes the big difference. I can give the same setup to two different guys, two different traders, and one is going to run with it and they're going to do well with it, and one isn't.
Yeah, yeah.
And that's all psychology. That isn't the trade side of it. That's just psychology. And I think and also it's like having it's the closest thing you can get to a mentor without having a mentor is your own trading journal, because it covers so because it allows you to examine. It's a tool of self-reflection, because it allows you to reflect on what you're actually doing. And self-reflection is a key skill of trading. If you haven't and it's one of the things I think a lot of, because I was out mentoring this morning, so it's just kind of in my head as well. At the thing is that ego that this person was mentoring, it's actually the opposite. I thought he quite got the ego under control. Ego stands a lot of times in the way of journaling and a lot of the way of trading. Um, because my typical mentoree, so we say the first hour, so you go and spend an hour with the typical mentoree, and the first 25 minutes is them defending their shitty system that doesn't work.
Yeah.
um, and then the next is 10 minutes of lies. There's at least 10 minutes of them telling you lies that they're doing better than they are doing, and all this kind of stuff. And they don't seem to realize that I don't care. I really don't care, because that's not what I'm there for. I'm not there to look at your system. I'm there to look at you as a person. And because I'm looking for exactly what their journal should tell them, which is patterns within them, areas, because all traders are basically the same. They all go through the same evolution. And by listening for 10 minutes to a trader, you can generally tell where they are on that evolutionary scale. And some people get caught at different points. I've had fellas, including myself, I'd say, who get hung up at a point. Some can't go live, for instance. That's a real typical one. They do super well, simulated account, disciplined, brilliant, great setups. They put €2 on the line and then they fall apart emotionally. That's the thing. So you can hear the fear. Why is the fear there? How do you combat the fear? All those kinds of things. And your journal can tell you all those things. The last thing before I hand it over to you is I'd say that the broker stuff, the things that you have in all the free broker, all the free tools you have in brokers, they're not enough because, like, if I go into my, like, I have a test account with IG Index, right? And it tells me how many trades I succeed at and how many trades I fail at and all this kind of stuff. And gives me an analysis, time and whatever the analysis is. It's not enough because it doesn't cover, because stats can look great and cover failure. Because I remember when I started off first, I went to a period where I had 82% success rate in my trades. And that's because I wasn't taking on enough risk. And I wasn't losing money, but I wasn't making money. And I know that my success rate's closer to 70 because that means I'm taking on enough risk in the trades that I'm allowing the trades to run and all that kind of stuff. And as I was saying just earlier on, when I started with live on Telegram, just for the last few days, I've been cutting stuff short. I've been doing the same thing. So because the success rate became more important to me than the income, and that I'll just change that. It's an obvious problem. It's an obvious thing. Once it's obvious, you can change it basically.
Yeah, you're trading your P&L, aren't you? You're trading your book,
Yeah.
not the. That's the thing, and that's the habit you can fall into
Oh yeah.
when you see these people either, and we've done it, I think before, either selling signals or offering signals or following signals and stuff and what have you. You start trading your P&L and stuff, which is never a good place to be. I tell you what, I'll there's a lot there for us to talk about to unpack. I'll address one of the kind of the last issue first, namely, in terms of the what you get offered by brokers, regardless of who they are.
Mm.
Um, it is much better than it used to be. It is
Oh yeah.
much better than it used to be.
Mm.
But how I would caveat it is that it is not your broker's responsibility to keep the data
Mm.
on your trades. They do, but it is not their responsibility. It is your responsibility as a trader. And you should be keeping it. Now, whether you're doing that on your own kind of on your you're writing it out in pencil on an A4 piece of paper, or you're writing it into your own Google Sheets or spreadsheets, or you are availing yourself to several of the very impressive commercial packages that are available to take your data. How you do it is depends upon who you are and how you like to operate, and also the kind of budgets you have. But the important thing is that it is your responsibility to collect that data. Okay, it is not your broker's responsibility to collect the data.
Mm.
I'm shocked at the kind of those numbers you talked about in terms of how many people are not journaling and how many people are doing it properly, how low they are. I'm shocked. I don't know why I should be. And maybe it's because all the people I work with, all the people I know, banging on about the 5 R's, risk management, reward, record, review, repeat, just literally, making sure you record your trades in every sense of the word it's just part of what starts to separate the wheat from the chaff. Um, I can put my hand on my heart, quite happily say, in all my years of trading, being around traders, working on trading floors, working with traders, coaching traders, mentoring traders, I have never ever met a single long-term sustainably successful trader who is not on top of their numbers in terms of they are not keeping their own data and reviewing it. You might get a little bit lucky for a while without keeping your data. The reality is you won't be long-term sustainable. It is your own gold mine, and as you said yourself, it is all about basically helping identify patterns in your own trading in you. Um, and once again, as you said at the start, I think if you're human, right? You are human. You are going to make mistakes. I think we've talked about that in previous sessions. You're going to make mistakes. Make a mistake is fine. All right, you're human, but when you start repeating the same mistakes, well, hang on a minute. On some level, this is a choice. All right, on some level, you're making a choice, and you really need to. The whole thing about keeping that kind of data is to be able to identify this early, and then also to sort of kind of force you to raise your own self awareness. But well, why am I doing this? Why do I keep repeating this same mistake? That needs to be unpacked. It needs to be looked into, and whilst you might be keeping fantastic quantitative data about all the metrics and the stats, very often it is more on the kind of qualitative side in terms of understanding the feelings, understanding your emotions, understanding the context within what you're actually doing, but being able to see those mistakes being repeated and have the kind of the hard data in front of you, what should force you to basically to stop and review what you're doing. Would you agree that's a fair point?
Yeah, I was just thinking actually, it might be one of the reasons why I don't struggle with that idea that 70% of traders don't do it is that we're probably dealing with different crowds, because like I tend to deal with an awful lot more. Is it amateur? Is that right word really for like I because through meetups and stuff like that, I tend to come into contact with a lot of, you know, whatever, let's say amateur traders. And I'd say a lot of them where if they're going to you, they're paying. So, they're going to be more organized if they're going to get to that stage and they're going to make that investment. It's less of an investment to talk to me in for an hour in a bar than it is for to pay somebody whatever. So I think it might be in that way. That's why I'm not as shocked by that statistic. And then I suppose if you look at overall traders, I mean, so and I also think as well that it kind of, it roughly matches the success rates of traders, the amount of people that do, because you're going to get the same organized people are going to be the ones that are going to get to the end, not Billy the gambler, it's just not going to happen. Also, I think as well is that an awful lot of people don't review their notes, their whole thing. And I mean, that's what Sunday is for. Sunday is a review for me. It's a review day, and to get ready for the rest of the week. And and it is about finding the things that because there's always some little fire that even as a professional trader, there's always some little thing that you can do. You can always improve some little. So yeah, and you're always hoping for that. You're always trying to improve slightly and improve slightly. And it's so it gets to a certain level because when you start off, it's all really quick. You learn what a trend line is, and it's a big day. And then by the time you get to consistency, and it's a big, big day. It's and then it's just little adjustments you're doing. It's so small, and every person is completely different. At the beginning, I think that traders are very similar, but then they get to a point when you get past, particularly when you get past consistency, that you start to see. I start to see much more individualism in the problems. That somebody is a little bit this way or somebody's a little bit that way because the problems are so small that they differ slightly per person, because it's only a small little thing. I mean, it's as I was saying earlier, I was exiting trades early for the last week. That's probably about 2 points a trade. That's not huge, but that's an area where I was.
Yeah.
It's a tiny little error, but it's an error all the same.
Mm-hmm.
So that's
Yeah.
I
You're
also
2 points down every winning day. That starts to add up. That starts to add up.
oh, it
Even
does,
just
yeah,
two
it
points
does,
down,
yeah. It's also
yeah.
as well what you're willing to accept
Yeah.
yourself in a day. Like I don't like the ideas. One of the things I think that you should have in your trading journal is a goal. And I think you should have a weekly goal. Like so, I have a very clear weekly goal, like for this week, which is to sort that thing out. Because yeah, and those little things, and you can have that little weekly goal. You should never have a financial goal. I always think
Yeah.
financial goals are the most ridiculous things in the world because the market is random. insofar as it will pay you when it wants to pay you, and it will screw you when it wants to screw you, and it's up to it. It's not up to you. So you take what you get. You don't. It's not there for you. You're there for it. So it's that financial goal. I want to earn 200 euros a day or whatever it is, 1,000 euros a week, 15, whatever is. It's just not
Yes.
going to work because you're going to go into a trade one day and it's just going to go for you, and you're going to make a lot of money, and it isn't your skill. It's the saddest
Yeah.
thing about it. It's not your skill. It's the skill was getting into the trade. The skill was not getting out of the trade too early. But the fact that it went is nothing to do with you. It's everything to do with somebody else who's a much bigger fish than you are making their mind up to do stuff. I
Totally.
also think as well with journals, you should write them
Yeah. Yeah.
and write
Yeah.
them.
Yeah.
I think
Yeah.
it activates a different part of your brain.
100%. 100%.
Yeah,
It's a very kinesthetic thing to pick up a pen and write it down. For me, maybe
mm,
it's our generation. Maybe it's our generation that writing things down, it kind of almost like locks in the experience.
yeah. I don't know about typing it. I never found the same satisfaction from typing out things um, that I found with handwriting.
Yeah.
And I think even if you have to read it to yourself out loud, because even that again activates a different part of your brain. And I think it's everything you can do just
Yeah.
to make it work.
Yeah, reading back old, trade sheets or trade journals, and you're looking through and thinking, Jesus, who's this Egypt? And then you're like, oh, it's me. you know,
Yeah.
it's me from like 10 years ago and stuff and what have you. It's because that in
Mm.
itself, I've a segue, but that in itself is enormously helpful because actually it is also a great yardstick to show you how far you've come in that time. When you're at it every day, kind of lose a little bit of perspective. Are you making progress? All right, it becomes easy to focus on your P&L when actually, when you've got good trade journals from 1 year, 5 year, 10 year, and even longer, it can actually act as a really, really good confidence boost to see how far you have come as a trader in your journey and stuff. You are right in terms of the you do need to understand why you're journaling and what you're actually looking to gain out from it. Okay, whether it's to be awareness or whether to be accountability or whether to help on your particular performance. Okay, um, because I would suggest that without intent, without goals, it just becomes admin. And when it just becomes admin, the likelihood of it becoming a chore increases. And once it becomes a chore, you'll slip in your record keeping, or you'll find a reason to leave it. I'll do the records of the weekend or something like that. That's just human nature. It's about finding um, an intention for your journal, so that even though it takes time, even though it might be frustrating, even though it might be, just a bit of a slog sometimes, it's that, there's a great quote in it from Mike Tyson about, discipline is about, finding things you don't want to do and finding a way to do them like you love them, finding a way to do it and stuff. And um, so yeah, sorry I digressed there a bit, but it does all play its part. You need to know why you're journaling and what you're journaling for, and to have an intention behind it to keep you moving forward, don't you?
Yeah, and actually one thing I think of discipline, because I'm really not a big fan of self-discipline. I don't think it's a thing. It's a short-term reaction to a long-term problem sometimes. But in this instance, I would say that you need a certain, like when you see a problem in your trading, a small little problem in your trading, you need discipline for 20 trades. That's what you have to do. And once you see that you're successful in those 20 trades, or largely successful, your brain will just take over and fix it for you.
Yeah.
It's just a short little thing. Now you're talking about reading old trading journals and getting a confidence boost, and I had completely the opposite experience.
It did.
I did. I was not so, couple of years ago. I was looking for scrap paper, because to save the environment, right on scrappy paper, and and I found an old trading journal, and I had a big long essay written to myself in the trading journal, and I had the same problems, but they were just smaller. So, so I was there off
Interesting.
for God's sake, and I can't be still working at this same, having the same thing, because a lot of the problems
Interesting.
I've had in trading were perennial for me, really, where I was making little mistakes. But the thing is that they got smaller and smaller and smaller. So if I was over trading, for instance, right? So I over traded like most people do at some stage in their career, and I just over traded much less. But I would overtrade occasionally. I think I'm overtrading at the moment, but I would overtrade occasionally. So, I just saw that I recognized myself in my old things, and I was going, oh, well, okay, fair enough. Because so a completely different experience.
Interesting.
Different,
Interesting. That's
yeah.
interesting. Yeah.
And yeah, the last thing I was going to say about them as well is that I think that they should, these are accountability groups, like a bunch of lads getting together and, writing romantic letters about their trading to each other is a great way of fixing all these types of things as well, because it's a, yeah, because you have to do it. You're told to do it. You have to do it. And there's no courses about them. I've never, because I've been on a few courses over my life, actually, just to come to think about it. And yeah, they couldn't teach you how to do this brilliant setup and whatever else, and then send you home with your setup and your handout and whatever else. But there's nobody ever talks about journaling in those courses. Journaling is this kind of abstract thing that's, I know I have to do that, and a vaguely guilt-induced feeling around it or something. It's not.
I talk about traders because to traders constantly about it because, as I say, it is the cheapest and the fastest way for you to improve as a trader is to keep is to record good data and then review it. That is the cheapest and fastest way for you to progress as a trader to where you want to be. And if that doesn't give you some sort of motivation or that doesn't sort of entice you to do it, well then you might need to have a bit of a deeper look at your own particular reasons for journaling. It is the cheapest and fastest way for you to improve and progress as a trader, keeping
Mm,
good records and reviewing them. All right, it is as simple it's as simple as that. Now, I in the interest of full disclosure, I hold my hands up and I do run like a little accountability group and stuff. The thing is, if you speak to those lads, it works, it helps. All right, it helps them. But part of that has come from my background in the air force, whereby you literally, you are constantly keeping data, and then you're constantly in a debrief after every mission. And sometimes the debrief takes longer than the actual mission because every bit of training value is extracted because the consequence for failure in that environment is so high that it is in your best interest. So I appreciate that I have carried that across in my trading life. But that's not some God-given right. Anybody can do that. Anybody can keep good data and then do a good review. Review each trade, review each day, review each week, review each month, review each quarter, review each year. Everybody can do that, and it can be as it can be as joyful or as different as you want it to be. I love it because I think it's a goal, man. Learning about
mm.
trading. I love learning about markets. I love learning about myself. I love seeing like, well, how can I be better tomorrow than I was yesterday? That's it. How can I be better tomorrow than I was yesterday? And it might just be the merest sliver, but I'm like, take that. I'll just incremental small gains. I'll take that day after day after day after day. But I appreciate that might also be the kind of trading psychology, the performance mindset that's what it takes. That's that's
Mhm.
that's what's required, isn't it? It's you're in a performance environment. You can't just turn up like you're some gunslinger in a cowboy western and stuff and just basically fire off trades like bullets, which I've seen you on the range, Ian. So you like
It's
that and
exciting.
stuff.
Yeah.
I think you
It's,
can get away with it. You need to have a plan. You need to know what you're doing.
uh, Although I have to say, sometimes my trading looks like I'm just firing off bullets because that's what I've been doing at the moment with scalping. Is that I sort of went into it in the last couple of weeks and went, do you know, I'm going to take everything. And I went and I took loads of trades because what I was finding is that I was good enough as well, which is on the nice side of it, is good enough to manage my trades. Like I have no big problem managing trades, so I'd get out of it if it was a problem. I'd get out of it cheaply if there was a problem. And then eventually you're just going to hit the one trade or the two trades in a day that make you your income. One of the things I thought with it's record keeping and not a wine fest, because I find sometimes, even with my own record keeping at times, it sounds more like a teenage mood journal. Like, oh, I'm so
You,
depressed because of my whatever.
I need to check with you, Ian. And when you say a wine fest, are you talking about moaning or are you talking about a nice Beaujolais?
Oh, wine, as in I'm so sad and I
Oh,
more
right.
wine
I always
whatever.
need to check with you.
Yeah. I don't like Beaujolais. My wife loves it.
Okay.
Actually,
First
that's
name
what
is spring to
some.
mind.
That's a yeah. Well, it is the time of year. It's the Beaujolais Nouveau is out now. I think no, out soon enough anyway.
I bow to your greater wine knowledge, mate.
Yeah. It's a carbonically macerated gamay. It's really bleh. Anyway. What you can say? So it's not a. It's
This
not
is
a.
why we are friends.
I like a nice glass of wine, but my wife and my neighbors all like sort of thinner, lighter wines, like Beaujolais, Pinot Noir, that kind of stuff, and I don't. I like the big, heavy, oaky stuff.
Yeah.
I lost what I was thinking. Oh yeah. So anyway, so it's not a wine fest. It's not a fest where you're sitting down there and complaining about things. It's supposed to be constructive. You have to record that these are your problems, and then you have to try and find a way out of it. Like, there's no sense in sitting there and lamenting, that it's not going well for you or whatever it is. There, you should obviously acknowledge that if you are having a tough time, you're having a tough time because that's going to affect your trading, your self-confidence, your lifestyle, all that kind of stuff. So, but it's not a wine fest. I wrote down a few things I thought there should be in trading journal. One is, what type of day is it? Like, what's the action? What was the action on that day? Like, was it up, down, or sideways? There's only three things you can do. And this is one of the things where you can actually start streamlining, because one of the things you can do with your trading journal is streamline it. Like mine is just a lot of it is just dots and dashes, or ticks and X's. Um, what type of day it was? Because you find out things like that. Like, I'm much worse in a sell-off than I am in an uptrend. I'm great in chop. So they're two-thirds of the action I'm fine in, and one-third of the action I'm not good in. And I wouldn't know that if I didn't journal it. Um, Naturally, trade specifics, time of day, what the setup was, what was the result, and did you stick to your rules the whole way through? Emotions and lifestyle. Did
Yeah.
you sleep? Are you hungover? Did you have an argument in the morning with somebody? Is it one of those days you can't focus? That's the thing I find with day traders a lot, is that including myself, there are some days you just can't pull it together.
Yeah.
Um, there was one thing. I used to go to a personal trainer. Um, Very attractive woman used to run me around the place,
Well, there's a
and
shocker.
it's a shocker, isn't it? And I used to be terrible after coming back after for the an hour and a half after I come back from after, because I was in bits.
Oh, right. Yeah. You were just generally, if you weren't terrible at trading, you were just generally
I
done
was
in.
yeah, I was just generally really tired. Like, I was sitting down in front of the screen going, "Oh God, I'm going to die," in a minute.
No, no. Why would
And
you?
then I found
Why would you
what?
trade after? Why would you trade after another minute PT session?
Well, you see why, but that's a whole thing, because it's another thing, like hangovers, right? I'm fine with a hangover. I can trade perfectly well with a hangover. So I can sit there and be hammered drunk, come home at 4 o'clock in the morning, get up the next day and go to work. And that doesn't affect my trading, except I might have a 20-minute snooze.
They just pull that higher functioning.
Yeah, yeah. And I think it's because a lot of the time, sometimes I go to work, especially when before I was on Telegram, I used to go to work to relax, like, because it's like me time. I sit there and I'm in my
Yeah.
room, nobody's going to annoy
That's
me, and I just sit there and do something that's absorbing, and it's a little bit fun, and and that you can do that hungover. It's like playing video games, like, at the end of the day. Anxiety level, or stress. If you made a mistake, how did you feel?
yeah.
Because all mistakes have start with one single thought. So if you overtrade, there's a thought someplace. There was some stray little tiny little thought that started it all off. And then that grows and grows and grows, and then it becomes an action, and then you screw yourself. And all of those things can be found in your body. There's always some place in your body that anxiety sits, or stress sits, or bad mistakes sit. So you feel something someplace, and you can learn to judge all those things. That's why I think half the heart attacks in the world happens. Some people carry stress in their chest, some people carry stress in their wherever. So, oh yeah, and every mistake needs to be looked at individually. I always think, so you have to look at that, because what can happen is you get really lazy and you just go overtraded again. Tick. But you have to look at why. You're not learning. And I think goals I mentioned, you should have a daily goal, weekly goal, some sort of goal in it, because you're always trying to improve something, and the goal should be what you're trying to improve or do.
Yeah.
This week I will stick to this rule. This week I will not stick to this rule, or this week I will trade, increase my size by 20%, whatever. Some little goal,
Yeah.
some little whatever.
Yeah.
And that's it.
Yeah, no, that's all good. That's all good. You're absolutely right. And it comes back to those points about, you need to have a goal. You need to have some intention, because otherwise you get into a feeling of, you're keeping the data, but you don't really know why. You just because Paul's just been banging on at me to keep the data, so I do it. But actually, why am I doing it? Because actually, part of it is you have a couple of goals and some intentions that you work towards, and you're doing a review at kind of end of the day, end of the week, and reviewing yourself against those goals, but also against your prior trading performance. And it's the thing I'm not sure if I've mentioned this before, but it's a thing that I'm kind of a big on, a big thing about, I'm always banging on about, is namely the difference between absolute goals and relative goals. So I fell for it at the start of my trading career. My trading mentor sent me an absolute goal to generate 2,000 pips in the FX market every month. And after about 3-4 months of working with him, I was nowhere near there. I was making 200 pips one month, and 300 pips another month, and 350 pips the other month, etc. I was nowhere near it, and he was kind of a bit dismissive of me, like, "Oh, you're not cut out for this. You're no good at this. Look at me. I'm making 2,000 pips a month, no problem at all. Pip, bing, 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 bing." And it's a bit disparaging, especially if you're kind of a bit competitive and you're wanting to do well and stuff. But what I realised was that, well, actually, at that time, here's a guy who traded for 25 years. He traded for 25 years, and he had made no profit for the first 11 years of his trading career, which you get quiet about. But actually, when I looked at my records, because I kept great records from day one, was that, as I was saying, first month I think it was about 150 pips. Next month, 200 pips. Next month, 250 pips. Next month, 300 pips. And so actually, the absolute gold was just used as a stick to beat myself with, which doesn't help me. We talked about it the other day, one of the other sessions about self-compassion. Whereas actually a goal relative to my own performance was much more inspiring, much more motivating. Well, do you know what? Last month I was profitable for 100 pips. Right, this month, okay, I'd like to be 125 pips. It's a little bit of a stretch without it being massive, without being foolish. Okay, and since that time I've moved on to using more kind of units of R. But at that time when I started out, it was a standard goal that basically wasn't finance related. But if you're struggling with your goals, or if your goals are basically becoming a bit of a albatross about your neck, start to think about, is it an absolute goal, or should you be setting a goal relative to your own performance? Okay, just to basically keep nudging you in the right direction. Okay, and that's one of the reasons why we keep the quantitative data, like your metrics, your stats. That's why, as I said, whether it's a Google sheet, or you're writing on a piece of paper, or an Excel, or a commercial package, you're keeping those metrics that day, because that does help you identify stuff like your equity curve, etc., and your expectancy levels. But then also you do need to keep a trade journal as well. All right, that trade journal is your qualitative. It's about the context of what happened. It's about the feelings. It's the screenshot, whether you're typing it up or whether like I used to do. I used to sort of leave the house and go and sit in a coffee shop up the road, okay, and with prints of all my trades from the morning and just literally write on them and stuff and what have you, because it gave me a bit of a break and I loved it. Nice coffee, basically write down my trades and stuff, and then be ready for the afternoon session stuff. And as you say, you can use you know, tags or categories to basically to spot recurring behavior. I'm also very big on you grading your trades, grading rates in terms of performance, execution, and confidence. Because once you start to build up, good sets and subsets of data of your trades, that in itself can give you some fantastic insight into your trading. As in, are you overconfident when you take, what turn out to be crappy trades, or are you fearful, underconfident when actually you're taking good trades? Is there any kind of correlation there? There might be, there might not be, but you can only find that once you start looking into grading your trades, keeping all that data, and then you know that coming out in terms of a weekly and monthly review. All right, so don't let the dust gather on your data. All right, it's a mine. It's a gold mine. It's a gold mine of fantastic data for you. And you should want to dig in and use it as a tool to get better. What did you actually learn from last week's mistakes? On each of my trade journals, I have to put down 3 learning points. 3 learning points. Have written all the data. All right, at least 3 learning points. And if those 3 learning points are repeating themselves, well, as we said, right, there's clearly something you need to address. All right, and that can be a trigger that leads you to improving your playbook and making better decisions based on data, rather than you just thinking, oh, yeah, I'm up for it today, or no, the market doesn't like me today, because that that rarely works, does it? You're just going to get you're just going to be meat for the grinder.
Yeah, I was just thinking about that 2000 pip thing. Now, I presume that was you were working in fund or something someplace because like a
No, no,
no?
that was a private mentorship, and that was in the days before they even had there was no it wasn't even micro contracts, it wasn't even mini contracts, it was full standard contracts, okay, for
Yeah,
FX and spot FX and stuff and what have you. So it's like, as a rule of thumb, it's like $10 a point.
right. Because putting that type of goal on any trader is stupid. Because the
Yeah,
problem you have with putting things like that, it's like putting an earnings goal for yourself every day. I have to replace I want to be a professional trader, which means I have to replace my income, which means I need to get 500 euros or 1,000 euros or 20,000, whatever it was.
it becomes a stick to beat yourself with, an albatross around your neck and stuff and
It
what have
does.
you.
Yeah. And it'll
And
force you into doing things that are just dumb,
yeah,
because you'll end up taking trades or holding trades or, oh no, this has only gone 50 ticks and I need 70 ticks. So I'll hold it and hopefully it'll fulfill
exactly. You start trading your book, you start trading your P&L. It doesn't help you at all and stuff.
no,
But the thing is,
no.
I can see that now. I learned that, later, but at the
Mm,
time, the time you're kind of a new trader and stuff, and and you're starting to think, well, actually, well, this guy, look at him, watch him, and he was, to be fair to him, he was a very good trader. All right, he was a very good trader.
yeah.
But he had like 25 years of experience. He was operating at a level of unconscious competence that I didn't even understand. I couldn't
Mm,
even see it at that particular stage in time and stuff. And so, he set me this arbitrary goal, which he's able to achieve. And, as I said, it just becomes an albatross around your head. And that's why keeping the date. So it's a goal relative to your performance, all right? A goal relative to your performance, rather than some arbitrary absolute goal which somebody else sort of puts on you. All right, that might get you started, but it's not. I don't think it's a very beneficial way to progress and improve as a trader. So I would
no.
definitely you know learn from learn
Yeah,
from my learn from my experience.
that's one of the things I find when you're a newer trader is that you have a real tendency to glorify people who are in the business for longer, because you look at them and they're doing something that's magical. I remember the first guy that I thought was magical, and And, I just completely glorified him and I wanted to be him. And I spent too much time, whatever, too much time trying to replicate what he was doing because that's the person I wanted to be. And it wasn't a great idea. And I think and the thing is that you have all these traders then who are glorified,
Yeah.
because particularly when I started off, that you have glorified them or you have given them more status than they actually than they truly deserve. And then they can be as passive aggressive to you as they want to,
Yeah. Yeah.
and that's a problem I found with it along the lines, like, when I was dealing with professional traders, is that sometimes, they're just having an off day for whatever reason they're having an off day, and they know that you need them more than they need you, and they will be passive aggressive to you and put you down and maybe give you some stupid task like that, and and I found that a problem. I found that like that was a thing that's it's a feature, and it's one of the things like when I started off first because I didn't pay anyone when I started off first. I didn't do any courses or anything like that. So I went and I found professional traders. And I had to be pleasing and I had to be nice and I had to be interesting because the problem, especially then, not so much now, because there's so much stuff on YouTube, the only way you could get information was from professional traders. And they all knew that. So professional traders had this mob of people looking for help who were like who were quite sycophantic, really, because that's what they had to be.
Yeah. Yeah. Yep.
And
Yep.
and especially because a lot of them are Americans. The Americans are really quite like it's a lovely trait of theirs, but they can be quite sycophantic as well
Mhm.
at times. And they will be passive aggressive, because they could be, And it's even there is one famous trader that is on a Telegram trader who he's a bastard sometimes to the people who are on Telegram with them, and he's just having a bad day, and he has somebody who's in this context is weaker than him, and he can just take that out on him. It's not. It's
No, I've seen groups
it's
like
not.
that, and it'll all get a bit Lord of the Flies and stuff and what have you.
Yeah,
And yeah, we have to
there's
realize
no
is
need for it.
just because the person might be a good trader doesn't actually mean they're a nice person or a person you want to spend any
No,
particular time
no,
with
no.
and
Yeah.
stuff and what have you. Yeah, you have to be able to differentiate the person from the trader.
Mm.
Even that individual, even if the trader themselves can't, sometimes you need to and what have you. So yeah, there is a cult of cults that exists in some of those spaces and stuff and what have you. But anyway, that
Oh,
is a podcast all of its own, isn't
yeah,
it? That
yeah.
it's quite
Just for coming to an end, the only two things I wanted to say was one is if you don't journal, you've only got assumptions. That's all you have. You
yeah,
assume that things are a certain way,
yeah,
but you don't know they're a certain way. And your brain is invested in protecting you from pain. And one of the things that what your brain will do, your subconscious will do, is get you to avoid because you might want to believe in something. You want to
yeah,
believe in your own success and your own whatever, or your own setup, or the sunk cost that you have put into your into your
endeavors.
into your setups like that. So you avoid journaling so you don't have to, so that you can live with assumptions, so you can live with less pain. And then I was watching when I was getting ready for this, I was watching one famous YouTuber who has like very large following, and they were doing an interview and somebody asked him, it was on a short, and somebody asked him about journaling and it was a lady actually, and she was going, no, I don't do that anymore. And I was sitting there, I was watching this going, yeah, that's because YouTube is paying you now. That is
Yeah,
the only reason you're not journaling your trades. It is not because if you are a professional trader and you are turning out this stuff, you're journaling and you're doing the work because it's hard work. But if you have, if all your YouTube things are getting 150,000 views,
that's YouTube lovers. Yeah,
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 you're not gonna, and you have all that and if you read and it's a thing for professional traders as well. I remember I used to get like 6 messages a day at one stage before that whole YouTube thing took off. The like people being on the internet and stuff like that. And it's a different world. But anyway,
but there
you
you
know
go.
it.
Yeah, but there you go and stuff. Yeah,
Mm,
so I think kind of just take it's probably right for us to start to close it up and what have you. Is that yeah, one of the things that I was even just reading about it very first thing this morning is about um everybody goes on about that sort of 10,000 hours metric, as you need to spend 10,000 hours to be a master. Yeah, and that's all well and good. But actually, I'd probably be saying it's actually more like 10,000 trades, because actually each trade is a feedback loop. Each trade is a feedback loop that basically,
Mm.
once you record it and review it, is a way and a means to start moving you forward. And that is, it's just more reasons why kind of the joy of basically recording your data and reviewing it. And then basically, as part of your turning that insight into action, okay, in terms of updating your trading plan, updating your playbook, however you want to particularly label it and stuff. And in the same way, of course, we've talked about, you want to identify your mistakes. Also, you also want to basically start to identify when you're doing things well. What are your good trades? Where are you making good decisions? Because of course, you want to do more of that. You want to leverage that when and ever you possibly can. So each of those reviews, as part of it, you should be setting your next performance target, and that comes back to that recurring theme of having a goal relative to your performance rather than an absolute one that you've never come anywhere near, you've got no experience of. Have it as relative, so you're always kind of moving forward, right? So yeah, kind of to wrap it up, the
Right. Just the one thing I was
yeah.
going to say is
Oh, yeah, go on, yes.
you can do 10,000 hours of doing it the wrong way.
Well, exactly.
You know,
That's
it's,
it. Yeah, that's it. That's it. Whereas each trade is a feedback loop in itself. A
mm,
lovely bit of OODA loop there. Paul likes to bang on about the OODA loop and stuff, and basically each one of them kind of builds upon it. So yeah, absolutely. All right. So let's draw it to a close. Your trading journal, it is kind of like the mirror that never lies. All right. Um, so you have to approach it with a bit of honesty, a bit of structure, and it will help reveal the trader you are, not the one you think you are, but also reveal the one you want to become. All right. Um, the data doesn't make you mechanical; it makes you mindful. It makes you mindful of what you're doing, of what you're progressing and stuff, and that is unbelievably beneficial on your journey. So, thanks very much for joining us. All right, thanks very much for listening here through to the end. As I said, there's a bonus session on double tops and bottoms that will get released. Listen, we'd love to see your thoughts on that. Okay, you can put it on the YouTube channel, etc. And then in probably a couple of weeks, we will have TOGS 53, the last one of the series, which is all about trading with constraints. Okay, how do you manage trading, multiple accounts with limited time if you're basically trying to trade around family, day job, other constraints. Okay, which is one of the topics that when we asked for feedback at the start of this series, lots of people mentioned that's what they'd like us to see. So hopefully you'll join us for that. So, as always, thanks very much for joining us, Ian. I hope you have a good time in Norway and stuff. I'm sure you will. Or it might be a dry week for you at the prices they're going to charge you. But anyway, nevertheless, I hope you and the family have a great time. For the rest
mhm.
of you, trade well, everybody. Have a fantastic trading week, and we'll speak soon. Trade well, everybody. Cheers.
Bye.